Welcome back to QAV America, Tony. This is for new listeners. Welcome. We're two Australian value investors talking about the American market. We've been talking about the Australian market for years. We were like, let's broaden our horizons. Let's start investing in American stocks as well and applying value investing principles. So each week on the show, we take a stock that's on our US buy list and I do a deep dive into it. Let's try and figure out why it's turning up on our buy list, as we call them, a pulled pork. But how have you been, Tony?
Very good.
Since we last spoke 20 seconds ago.
Good, thank you. Are we called QAV America now? Did we have to change our name? Like, it's no longer the Gulf of Mexico. It's all QAV.
Yeah.
It's now QAV America.
Well, originally we were QAV Mexico, but then Trump said we had to change it to QAV America. Tony, a couple of weeks ago on this here podcast, I did a deep dive on a company called Zepp Health, Chinese smartwatch company. Within days of me publishing that, their share price jumped up 400%. So I'm not saying I'm a genius, but
no one else is either.
Some people say I'm the greatest genius who ever lived. So that was an interesting one. They have this smartwatch technology that we talked about. It sounded pretty good. But apparently within a few days of me publishing that, they came out and said that they expect a 30% year-over-year revenue growth for the second quarter of 2025. This would be their first revenue increase in 3 years, and it was seen as a big turnaround. We did talk a lot in the pulled pork about some of the structural things that they were doing and changing their branding, and they've also apparently signed a couple of prominent athletes, NFL running back Derrick Henry and ultra runner Rod Farvard, as brand ambassadors for Amazfit, one of the brands that they market under on Amazon, which, as I said, makes you think that it's associated with Amazon, but it's not. It's just something they sell on Amazon. Anyway,
and they had,
we don't hold them.
They had low price points, I think, too, didn't they? Which was one of their big selling
Very
points.
low, yeah. We don't hold them in our portfolio. I wish we did, but our portfolio was full. We didn't have any capital left to allocate to them, or I would have bought them. But I did. The reason I found this out is I put together a spreadsheet just tracking the stocks that I've done a pulled pork on that we don't hold in our official portfolio. And some of them have done really well. CX is up 49% since we talked about it at the end of March. That one, Zepp, is up 361% since we talked about them on the 11th of July. Some of the other big ones are POSCO Holdings. Remember them? That was on the 1st of July. They're up 20% since we talked about them on the 1st of July. Precision Drilling Corporation, we did at the end of June. They're up 12%. IHS Holdings, we did at the end of May. They're up 18%. Canadian Imperial Bank of Commerce is up 16%. Danaos Corporation is up 13%, Greek shipping company. The one that hasn't done as well was NL Chile. It's down 20% since we covered them in May. But the rest are all doing quite well since we've covered them on the show, which is, all jokes aside, just evidence of a couple of things. Number one, the US market is kind of bonkers at the moment. So I think a lot of things are doing well over there. But also, we are picking stocks that are undervalued, doing good businesses that are undervalued. So we expect them to do well over time.
And it's a kind of almost like a law of physics. If you give a lot of cash to good managers, you're going to invest it wisely and make money for shareholders. So that's...
You hope.
You hope. Yeah. All things being equal, that's what should happen. Yeah.
Well, the stock that I've got for this week, Tony, is unusual in a couple of ways. Number one, it's a NASDAQ stock. I think I said in last week's show, we don't tend to...
Can you whisper it to me before you announce it so I can get a 4-bagger this week? No, we don't front run stocks. We should say that. We don't buy something and pump it. Yep.
No. It might be one of the ones that goes down 20% too. You don't know.
No.
It's a NASDAQ stock. We said last week that, we don't tend to get NASDAQ stocks a lot on our buy list. Technology stocks tend to be way too expensive
Mhm.
for us. But this, for whatever reason, is a NASDAQ stock. It's also sort of a classic Berkshire type
Yeah, it's a
stock.
bit surprising to find it on the Nasdaq, isn't it? It's
Hmm.
like I couldn't see the
I
link
don't know why
between
it's on the NASDAQ.
technology and this company. Yeah.
No, well, maybe when it floated back in 1995, it was. Anyway, the company is Seneca Foods. And I think if you're a North American listener of this, you probably know Seneca Foods. I asked Chrissy, my American wife, hey, you know Seneca Foods? She was like, yeah, of course. I was like, okay. They distribute all around the world too, so I'm pretty sure we've bought Seneca products, had them here. But they're a classic American company, been around since 1949, big into canning and food packaging. So beans, corn, fruit, anything that needs packaging, they're the kings of packaging food, and they've acquired a lot of different companies over the years they've been around. But it's like one of those classic Berkshire type businesses, unlike a lot of the companies that we've talked about in
Mm.
the last few months, like weird fracking operations and walking oil wells
Uh-huh.
and mobile phone towers in South Africa and smartwatches in China, etc., etc. This is a boring food manufacturing business. And as I just said to you on an Australian show, I did have a question for you about it because it is a little bit unusual. Its cash flow trend is a little bit unusual, but we'll get to that later. So their website, by the way, their tagline on their website is "Farm Fresh Goodness Made Great." I don't know if that's a MAGA add-on. They're making farm fresh food
Great
great
again. Yep.
again, or if they've had that pre-MAGA. Not sure.
Uh,
But the founding of it is a good story. Founded in 1949 by a guy called Arthur Walcott, Art Walcott, who had just graduated from doing a degree in business and economics at Cornell University in New York. He went to an auction in Dundee, New York. Actually, he hadn't graduated. He was a Cornell senior. He was looking for a good deal on a typewriter. Ended up buying a bankrupt grape juice plant instead, which apparently did own at least one typewriter. So you buy the bankrupt company and you get the typewriter thrown in kind of deal. He must have seen something in it because he took it over and yeah, I think in the first year it did like $100,000 in revenue, something small like that. Well, smallish, but not bad.
big for
And
1949, though.
yeah,
Mm.
probably. Yeah, it would have been a lot. But he turned it into an absolute monster company. And he only passed away in 2021, aged 95. He was the chairman and president of Seneca Foods from 1949 to 1987, and then served as chairman of the board until he passed away at
Oh, wow.
95. So, yeah, he sort of reminded me of a Charlie Warren
Yeah.
sort of guy. Been around, run his thing, stuck to his knitting, built
Bought
a
it
good,
cheaply out of
solid business.
bankruptcy.
Yeah,
Mm.
yeah, yeah. In the 1950s, Seneca contracted with Minute Maid to co-pack the first frozen grape juice in the United States. And today they produce canned, frozen, bottled fruits and vegetables sold under their own brand and also through major retailers' private labels. In the 1990s, they did lots of acquisitions and became, for a period of time, the world's largest processor of canned vegetables.
Mm.
In 1995, the company went public. Today, about 85% of their revenue comes from canned vegetables and fruits. The rest comes from frozen products, juices, and snacks. And they have an EBITDA margin about 10 to 12%. I told you about Walcott. He was married to his wife, Audrey, for 72 years. married her, and bought the bankrupt grape
Hmm.
juice plant in the same year,
Wow.
1949, while still a senior at Cornell. Got back from World War II, went and studied, married her, and did his thing. The CFO of the company is a Michael Walcott. He's also treasurer and senior vice president of the company. Not sure of the relationship, but judging by his photograph, I'm guessing he's probably a grandson of the founder, or maybe a very young son. Maybe he and Audrey were still at it for a long time, and this guy's his son. But he looks like he's in his late 30s, early 40s. Read a bit from their 2025 annual report. Seneca is a leading provider of packaged fruits and vegetables with facilities located throughout the United States. Its high-quality products are primarily sourced from more than 1,100 American farms. The company's product offering includes canned, frozen, and jarred produce and snack chips. Its products are sold under private label as well as national and regional brands that the company owns or licenses, including Seneca, Libby's, Green Giant, Aunt Nellie's, Cherry Man, Green Valley, and Reed. The company's fruits and vegetables are sold nationwide by major grocery outlets, including supermarkets, mass merchandisers, limited assortment stores, club stores, and dollar stores. The company also sells its products to food service distributors, restaurant chains, industrial markets, and other food processors, export customers in approximately 55 countries, and federal, state, and local governments for school and other food programs. Additionally, the company packs canned and frozen vegetables under contract packing agreements. Seneca Foods Corporation conducts its business almost entirely in food packaging, which comprised 98% of the company's total net sales in fiscal year 2025. Already said the breakdown before. Non-food packaging sales, which primarily related to the sale of cans, ends, seed, and outside revenue from the company's aircraft operations. Of course, why not? If you get enough tin cans, I don't know if you know this, Tony, but you can make a plane. You get the tin cans
Uh-huh.
represented 2% of the company's fiscal year 2025 net sales.
Is
So,
that selling food to airlines to serve on the planes, or do they actually have an aviation
no,
division?
they bought an airline. I saw
Really?
that in the notes somewhere. I didn't drill down. It was small. I'm guessing it's for, you know, moving stuff.
Right.
Like they have
Freight.
their own integrated airline.
Yeah, okay.
Yeah, something.
Mhm.
Is my guess, but I didn't get into it because it's such a small part of their business. Now, this is from the chairman's report in their most recent annual report. Fiscal year 2025 was challenging yet solid for Seneca Foods, with net earnings of $41.2 million compared to $63.3 million the previous year. Major factors impacting profits include extreme weather during the planting and harvest seasons, causing historically low crop yields and ongoing inflation pressures. Additionally, significant tariff-related cost increases, particularly for steel tin plate, added substantial expenses. The severe weather, especially in Minnesota and Wisconsin, resulted in just 70 to 75% of expected crop volumes, forcing plants to operate below capacity, inflating unit costs. However, Seneca leveraged plentiful inventories from 2023 to meet customer demand. Moving forward, the company plans to operate at full capacity to rebuild inventories to normal levels. Steel tariffs remain a critical challenge. Since 2018, US domestic tin plate production capacity sharply declined, forcing reliance on costly imports. Recent tariff increases from 25% to 50% will further elevate costs, inevitably passed on to consumers. Despite these headwinds, overall unit volumes rose nearly 6%, buoyed by strong performance in branded retail channels, including Green Giant products and new innovations like canned pumpkin. Which, by the way, you ever tried to buy canned pumpkin in Australia?
I haven't, but we don't do pumpkin pie, so I guess we don't have much of it here. We don't do
Well,
Thanksgiving.
I do make pumpkin pie
Oh, good for you. Uh-huh.
for Thanksgiving for Chrissy every year.
You're giving thanks for Chrissy being here?
I am.
Uh-huh.
That's exactly what I'm doing. Yeah,
Good
yeah.
on you.
And I'm giving thanks to her country for letting her escape 16 years ago and
Mm-hmm.
come to Australia. Um, but yeah, it's the one thing I started it years ago. It's like my small attempt at Thanksgiving was her favorite sort of
Mm.
holiday in the US, and so I try and recreate a little bit by making pumpkin pie, and I'm bloody good at it too. But over there they use canned pumpkin. We don't
Mm.
have canned pumpkin here, so I have to get a real pumpkin and
Mash it up.
roast it and
Right.
puree it myself. Yeah, yeah. It's not a big deal, but yeah, you just can't get tinned pumpkin here. Chrissy's always like, "Why is there no tinned pumpkin in this country?" I'm like,
No
"No, we just have
Thanksgiving.
real pumpkin."
Yeah.
Yeah, well, I mean, yeah, I guess pumpkin pie. I don't know what else you use tinned pumpkin for, but yeah.
You could
And
convert it
pumpkin
to
pie is a weird thing.
pumpkin scones, couldn't you?
It could. Pumpkin pie is a weird thing if you're not used to it. Like,
Mm-hmm.
it took me a while to get used to savory dessert, but I enjoy it now. I do a really low sugar one too. I used to buy one. There was a place in Brisbane that sold them. I used to buy it, and then they went out of business. So anyway, I had to make
Because you're
my
the
own.
only person who married an American. They're like,
No, you had to order like 6 weeks in
ah,
advance if you wanted a pumpkin pie for Thanksgiving. It was like
yeah,
boom,
right.
boom season for them. Anywho, moving right along. Tinned pumpkin, yes. The snacks and glaze fruit segments had strong years, though tariff-induced price hikes on imported ingredients like pineapple and orange peel may impact future
Mm.
pricing. Seneca continues focusing on cost control, strong balance sheet management, debt to quality ratio at 0.62, and conservative liquidity strategies, positioning itself to seize strategic growth opportunities. The company maintains a robust workforce. I think they hire about 2,800 people through competitive wages and significant investments in seasonal housing, essential to sustaining operational efficiency. The president expressed confidence in Seneca's long-term resilience, highlighting employee dedication and shareholder support, underscoring the critical role the company plays in providing nutritious, affordable food to consumers. One of the things that he did talk about is inflation pressures in the US driving consumers towards more affordable canned products.
Right.
So their unit costs are up because of tariffs, but they've sort of integrated them into their pricing, and they think more customers are going to be buying canned foods as Trump's tariffs make everyone go broke. Um, there are
Did the
there's
chairman? Did
sort
the
of a
chairman really say that?
no, that
Oh
was I don't want to put words in his
no.
mouth, Tony.
Yeah.
No. So why it's cheap? We've had a lot of crazy businesses that we've done pulled porks on over the last few months, and a lot of them are cheap for a lot of different reasons.
Mm-hmm.
This one, hard to tell why it's cheap from a value perspective, other than I think it's just an old, boring food canning business, which is again why it to me just screams like a classic
Mm.
Berkshire Hathaway kind of investment. It did have a rough couple of years, which might have hurt it. As he said, they had bad crops. They lost money for the last couple of years. They had to really dig in and support the business. And they really had a great year in 2025, cash flow wise, profit wise, but it was sort of a turnaround year, and I wouldn't expect them to have that kind of year moving forwards. One of the things that they have done, though, despite all of the challenges, is pay down nearly $300 million in debt. So that's good. It's reducing their interest expense slightly. But they've got a lot of a lot of Moti type competitive advantages, huge scale, very strong and old retail relationships, vertically integrated operations, which protect it from volatility and supply chain costs to some extent. But it's a mature industry. They don't pay a dividend.
Mm-hmm.
They like to put the money back into the business, and they're not sexy. They don't do it. They don't have an AI division. They don't have a chip manufacturing plant out the back.
There's no meme stock promoting them.
No, maybe we should
Yeah.
suggest that to them.
QAV meme stock America.
Yeah. Well, just having it on this show is
Right.
all it needs, as Zep has proven. From a numbers perspective, the price to operating cash flow at the moment is 2.09. But this is what I wanted to ask you about. So I mentioned this earlier. So if I go over and look at their numbers in Stockopedia, if I look at their operating cash flow from the last 5 years, so 2025 full year ending March 2025, 335 million. If I go back to 2024, it was negative 83 million. 2023, it was negative 213 million. 2022, it was plus 30.2. 2021 plus 183 and 2020 plus 127. So it's been a choppy 5 years, and the 335 is like the best year they've had in 10 years by a long shot. So I don't expect them to do that again year after year. I mean, they're not generating $335 million a year in cash flow. So whether or not their prop CAF, price to operating cash flow, will look as good a year from now, or would have looked as good a year ago, probably not. But it does look that good right now. And so the question I wanted to ask you is, if you're looking at a company like this that's had a rough couple of years, turned it around, had a really good year, but and they're forecasting that won't look like that forever, do you discount the really good year, or do you say a really good year is a really good year and we're looking at today's numbers and that's good enough for me?
That's exactly what I do. Again, this idea of if it's a one-off year, look, I might pay attention if they sold something, for example, and that was for some reason the assets went into cash flow. Doesn't always do that; usually goes into the balance sheet, but there could be some cases where they sold something which did. That might sway me not to. But look, if they can generate this cash flow and they've been through some bad years, which is probably the right time to buy them, frankly, because it's not like if they've been through the bad years and they've survived and now they've had a good year, that says to me that they can withstand bad years. And so it's buying when the going gets tough and then waiting for it to get better. And I take your point. This is a one-off year for whatever reason. I think you mentioned off air that it might have been because of inventory flows were a bit unusual this year. So again, that might not happen in the future. But generally, like it's not quite a law of physics, but if you've got a company and it's thrown off a lot of cash and the company is been around for a long time, it's not going to go broke. It's got, as you say, moats. It's pretty integrated into its industry, and it's got good management, and it's either the son or the grandson of the founder. So they probably learnt a lot about the industry along the way. Giving a high amount of cash to someone like that's probably a good recipe for them to invest it wisely. And so, yep, it might be a one-off, but yeah, if they could put that back into the business, they're going to grow sales, I would have thought, anyway, and improve the business, or as you say, pay down debt to improve the balance sheet. So I'm happy taking the one-off cash bump and not discounting it, based on an average over a number of years or something like that.
Good. Well, I'm glad you feel that way. Some of the other numbers, I said they're not paying a dividend yield. The F score is a 6, so it's pretty good. I wanted to just look at the Stockopedia numbers. They give them a quality ranking of 68, a value of 94, momentum of 68, and a stock rank of 93. So from our perspective, pretty solid Stockopedia numbers. If you look at the 5-year chart, it's been going up in a straight line since it bottomed out in the middle of 2023. Middle of 2023, it was trading at $32, and today it's around $102, just north of $102. So, great time to buy it would have been the middle of 2023. It's gone up 300% since then, give or take. But despite that, still comes in very, very solidly with our numbers. I've got some more quotes here before I get into the before I get into the scoring. See what I've got here. The turnaround was driven by normalizing inventory levels, reducing working capital drag, and full monetization of the 2023 pack inventory that got them through the disastrous 2024 season. In FY 2023 and 2024, inventory inventory built up ate cash, but in 2025 they flipped that around. 325 million realized from inventory alone, which was the biggest single driver of their cash surge. So it wasn't magic. It was just they had the
Mm-hmm.
inventory and they pulled it out and they sold the crap out of it. So
So,
that's good
okay,
business,
so
right?
you said prop calf was two, something like that, wasn't it? Two times.
Mm-hmm.
Yeah.
Mm.
So even if we average it over the good year and the bad year and say it's we should look at an average cash flow, it's still going to be a low prop calf. It's still going to be 4 or 5 times I would have thought. So it's still
Below 7, yeah.
yeah, it's below 7.
Yeah. So not necessarily repeatable, that inventory reduction as a one-off event as they cleared stock, but it does, as you said, puts them in a strong cash
Mm-hmm.
position where they can fund plant capacity or new acquisitions,
Mm-hmm.
and they run a very tight operation debt-wise, as opposed to some of the businesses we've talked about recently carrying a lot of debt. So let me crack into some of the other numbers. They don't have a qualified audit. I checked their most recent annual report. Positive market sentiment has been for quite some time. Average daily trade is about 6 million. So good liquidity
Mm-hmm.
for pretty much everyone. Price to operating cash flow 2.06, 2.09, something like that. Quality rank is a 68 out of 60. A 68, which is above 60. So we give it a score for that. Stock rank is a 93, which is above a 90. So we score it for that. The F score is a 6. So we score it for that. Price is not less than intrinsic value number one. Our intrinsic value number one is $30.25. The price is around about 102. So it doesn't score for IV1. There's no forecast EPS. Doesn't have a lot of broker coverage,
Mm-hmm.
surprisingly to me, because it's such a old and relatively large business, but no forecast EPS, so we don't have an IV number two. Price is above the book, but lower than book plus 30. Book plus 30 is about 119 and the price is about 102. So I did score it for that. It does have positive book value growth over the last few years, so it passes for that. No dividend, so it doesn't get a score for that. And the directors, from what I can tell, the CEO and the COO combined own about 6%. So less than the 10% that we want to score them for that. But all up, they get a quality score, a QAV quality score of 100%,
Ooh,
10 out of 10,
wow.
and a QAV score of 0.48.
Very high.
So very good QAV score. So that is Seneca, SENEA is the ticker code. They just couldn't fit the
C.
C. They couldn't fit the C in. They tried, couldn't get it in. How much do you know about Seneca? The Seneca the elder or Seneca the younger?
Uh, about as much as I knew about Seneca Food before you told me about it.
Well, I know quite a bit about the Senecas because, with the Caesar show
Mm-hmm.
that I do, we've talked a lot about, particularly Seneca the younger. Seneca the elder, the father, was a philosopher slash rhetorician in ancient Rome, lived through the reigns of Augustus, Tiberius, and Caligula, and had a relatively interesting career and wrote a lot of interesting works that have survived, some of which have survived. But his son is the more interesting one. So his son was a very famous Stoic philosopher and was tutor to the Emperor Nero when he was a young lad, hired to be his tutor. And then when Nero became emperor, when he was 20, 18, 20, something like that, Seneca became his advisor and basically ran the government for the first 5 years of Nero's reign, which is known as the golden years. It was everything was great, everything was going well, and then Nero turned on him, and Seneca also got himself into a bit of trouble. There was rumors of him sleeping around with people he shouldn't have been sleeping around with, and there were suggestions that he was involved in some sort of treasonous plot. And I think he ended up having to kill himself. He had to commit suicide. But yeah, like a really interesting guy who tried to right the situation in Rome in the early part of the empire,
Okay.
tried to bring a civilized approach to government for the first time since the death of Augustus, really. And I don't know which one these guys named themselves after,
Yeah, I was
but
going to ask.
I assume the
No,
younger.
no,
But interesting to me when
no,
hmm,
no tin food in the Seneca household in Rome.
yeah, they did have ways of storing
Mm.
food, but the company that we just talked about on the Australian show was called Bhagwan. I guess after Rajneesh. These guys are called Seneca, I assume, after the Stoic philosopher. So interesting when you see companies that have deliberately chosen a very deliberate name, you imagine to represent what they stand for in some
Well, I
way.
did wonder if they were based in Seneca, New York, which is a town named after Seneca, I would think, but they may have just named it after the local town. Yeah.
Interesting. Well, they were based up somewhere around upstate New York. So, yeah, it could have been. Could have just named themselves after that, and I'm reading too much into it. All right. Well, that took the wind out of my
Oh,
sails. Thanks.
I'm just hypothesizing. I don't know.
I don't know either. Anyway, check him out. That's Seneca. What do you think after all of that, Tony,
Oh,
as an investment?
as we said before, a lot of people wouldn't get excited by that, but I thought it was a great thing to pull apart when I saw it on the notes before the show. I got excited. It's the kind of classic value business, long history. The founders passed on, but the family's still involved. So a lot of history in managing it, a lot of moat, and a lot of cash. Buy it at 2 times cash flow. I'd be snapping it up if I was in the US.
You know, I follow the value investing subreddit, and I see people post all the time on there that there's no value buys left in the US. They're all talking about Google as being the value buy, and that nothing's left, everything's priced to perfection because of everyone's got all the data and all the information. And we're finding these companies week after
Yeah,
week that have just great numbers from our perspective. Like
mountains of
every
cash.
week,
Niagara Falls
I
of
never
cash.
struggle.
Yeah.
Yeah, like the I did a new buy list for the US market yesterday, and on the buy list, the final version of the buy list, there is 54 companies
Right.
that some we've already talked about, some we already own. There are some big brands like Vodafone, Hertz,
Yep.
which I think we've talked about Hertz before.
We did. I think it
Um,
came out of bankruptcy or it
some of
was
the
going into bankruptcy when we spoke about it years ago.
hmm,
Hmm.
don't remember. United Airlines are on there. Shell is on there.
Wow.
Avis is on there. Um, so some very, very big brands on there, which will be interested to drill down
Hmm.
into. But then a lot of other companies, Methanex, ADO, Adico Agro, a lot of financial companies, as we've said before, Waterstone Financial, Synchrony Financial, Up FinTech Holding, O'Reilly Automotive. Some of the other ones we've talked about, Year End Digital, I think I've talked about them. I looked at them. Stealth Gas is still on there. Mammoth Energy Services, who I nearly did. By the way, their ticker code is Tusk. which is
Named
I
after
don't know what
Fleetwood
that's got
Mac.
to do with.
Yeah.
Yeah, you would think so,
Mm.
but I think it's named after the mammoth in their name.
Ah,
But it's a pretty cool name.
yeah.
Tusk, pretty cool ticker code. But it's just like over 50
Hmm.
companies on the buy list that. So there's plenty of
And
choice if you're
and
looking for value buys in the US.
and we draw a reasonably arbitrary cutoff for the buy list too. So take a
Yes.
more loose definition of value, you can find hundreds on the list probably.
So for new listeners, we have a cutoff of a 0.1 QAV score, but the reason we have that is just so we have a cutoff, right? It was
Yeah.
very arbitrary
It gave us
when you came up with it.
a list that we could easily manage, and we'd always find something to buy, but it wasn't too big to be unwieldy. Yeah.
Yeah. But if I okay, so if I look at my overall scoring sheet and go down lower than that, yeah, there's hundreds.
Yeah. And if you said, I think
Yeah.
you said once I think there's about 3,500, maybe 4,000 stocks on the US
Yeah.
market. So if you took the top decile, 400 stocks, you could easily
Yeah.
say there's 400 stocks on the value buy list if we just kept going down the list until we had 10% of all stocks from a value ranking
Yeah.
perspective. Yeah.
Yeah. So I don't know why these people can't find value stocks in the US market because I find them every week.
And they go up, as you said. And the portfolio's been doing well too.
Oh yeah, I have. Well, I haven't done. I should just do that before I go. Do an update on the our US portfolio. Um, well,
But
in the
it's not
last,
just you saying that you can't find value stocks. I mean, Warren Buffett said it all the time too, that he's been teaching this stuff for 50 or 60 years and he still finds things to buy.
yeah.
Yeah.
So our portfolio in the US has been running since September 2023. It's up 59, 60% over that period of time versus the S&P 500 up about 43%. In the last year, it's basically been tracking just slight. Well, at the moment, it's about a little bit north of the S&P. It's up about 19% versus the S&P 500 up about 17%. Going back 6 months ago, we were up 40% for that period versus the S&P up 10%, but Trump's tariffs have played havoc with our portfolio, but it's still beating the index for the last 12 months. But the last 6 months, it's come down quite a bit, but some of our stocks are, doing very well. Willis Lease Finance Corp was up 300%. It's now up 200%, so it's come down a bit in the last few months. Euroseas is up 84% since we bought it. Innova International is up 75%. Foreign Trade Bank of Latin America is up 65%. Optimum Bank Holdings is up 40%. Regional Management is up 37%. So they've all, mostly doing very well. NL Chile is the one that's down out of all of them. It's the only one that's down. It's down nearly 20% since we bought it, but I might have to get rid of it.
It's getting close to a rule one then.
Yeah, but lots of opportunity in the
Yeah.
US market if you know where to look.
Yep. Definitely. And you don't get distracted by meme stocks or you don't get distracted by crypto or anything else.
Yeah. Right. Thank you, Tony. That's QAV America for this week.
Have a good week, Cam. Thank you.